If we start out that everyone's goal at the end of the day, yes, some people may say things like, I want to get wealthy. Some people want to just grow, hit a certain kind of monetary figure. But ultimately, at the end of the day, all that really matters is preserving and growing wealth. There's a bunch of things out in the world, especially the monetary policy experiment that's been going on over the last, 50 plus years, that put that at serious risk, and where the outcome is that you lose purchasing power over time, and that very little wealth kind of survives that. And so gold is that insurance policy. And then, as we talked about it, it's an insurance policy with asymmetry in it. It survived through debt booms and busts. And if you're owning it for that reason, then clearly you want to own physical gold. You don't want to own precious metals, and you want to have that because at the end of the day, there's no impairment risk or counterparty risk. Is that kind of articulating that, pulling that all together in a way that makes sense?
Yes. And you know what? Thank you for saying this last thing, the impairment risk. That's key. Not only is this an asset that doesn't have a counterparty, it doesn't have impairment risk. In other words, an ounce of gold is an ounce of gold is an ounce of gold is an ounce of gold. It's not going to default on its obligations. So not only is it not a promise of somebody, it itself is just a thing. And so it cannot get impaired in a way that a stock or a bond or a promise can get impaired, meaning not only they don't do what they promise, but you can never recover. See, with gold, there's price volatility, but there's no impairment. So I think the issue that you touched on, which we haven't touched on, is making money versus preserving wealth. It's a lot easier to make money than it is to preserve it. I mean, you can see in the crypto markets, tremendous wealth has been created. So the question, this is pretty new wealth. So the question is, how lasting is this wealth going to prove to be? There was tremendous wealth created in the internet boom in the 90s. Most of that did not persevere. I mean, some of it survived and became bigger and bigger than ever, some of the companies that we know, but most of it didn't. And so gold is really, it can be used as a speculative vehicle like anything else. I mean, you could speculate, you can make money in pork bellies. So we're not talking about that use of gold. Yes, of course, people can speculate in gold with leverage to create wealth. We're talking about preserving the wealth that has already been created. So physical gold, in the way that I'm describing it, is not for people who want to get rich. It's for people who want to save the purchasing power that they have already acquired. And yes, it is possible and likely that when bad things happen, and you're the only one or one of very few people who have preserved your purchasing power, while others have not, you have opportunities to create additional wealth by using your liquidity to buy assets at distressed prices because other people don't have liquidity and have to sell them. But that's the next leg of the strategy, if you will. The front leg of the strategy is to preserve purchasing power, and that can only be done through physical gold because it is the only medium that is free of counterparty risk, free of impairment risk, universally recognized, doesn't depend on anything, and whose demand for which exponentially rises as confidence in financial assets and other alternatives declines. So basically the inverse of trust. That's what it is.